Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. I recently went over an article, I think it was from the Silver Institute, talking about silver demand increasing as the supply is diminishing as silver is used in 5G technology, bringing the world connected through like we've never seen before. And the silver used for electric vehicles, EVs, silver used to possibly make a vaccine for the virus. Silver is used more and more and more in batteries. NASA is using silver. Silver is the most highly conductive metal for thermal conductivity and electricity, so no other metal performs like silver does. It's essential in today's world, especially in the new industrial world we're headed in. And the article is talking about silver being up 556%, which would be $85 silver if the gold to silver ratio goes down to around 20-1, which it could be in the next 5 or 6 years. So we're talking about that, and I found this article from Seeking Alpha talking about predicting the next move in gold. And if we're talking about gold, we're going to be talking about silver, because silver is more than likely going to be outperforming gold as the ratio sits extremely high right now. It's extremely exaggerated and has to normalize back down to lower levels. So despite the uniqueness of the current recession, it is instructive to study how gold has performed in prior recessions, and that's perfectly worded, right? If we can see how gold and silver acted during the last recession or during 2008 credit crisis, we can get a similar idea on what's going to be happening, and that actually led to $50 silver. So gold has done well, but cross-asset correlations don't allow for trading based on trends in other asset classes. Trade gold, but be careful extrapolating trend based on stocks, bonds, or dollar performance. So gold, a safe haven risk or on trade. A safe haven or risk on trade. Is it risky? Obviously, with every risk, there is reward, but is gold seen as a safe haven metal, or is it actually risky to invest in gold? A lot of people do invest into gold and transfer their money out of stocks into gold because it is a safe haven in times of economic turmoil, and I think silver is going to start seeing that more and more as well. So the arguments for holding gold in portfolio are completely compelling today. The first reason is that investors prefer hard assets in a crisis period. Historically, in crisis periods, real assets tend to hold their value better than financial assets. This is the safe haven value of gold. As world financial assets crumble, many hope that gold will remain standing. The second reason for holding gold today is for its currency-like store value quality. As if it wasn't evident before the virus crisis, central banks and governments have no intention of getting their fiscal houses in order and reining in debt levels. On the contrary, no government in the world is concerned about deficit spending, and governments are racking up debt on top of debt. As any economics 101 student should recall, profligate government deficit spending, not to mention central bank money printing, extremely erodes the value of a nation's currency. As all national governments behave in the same manner, one weakening fiat currency only depreciates and appreciates relative to another fiat currency also getting depreciated from government and central bank actions. It's a race to the lowest common denominator, hence the desire for investors to find currency-like substitutes not subject to rising national debt or central bank balance sheet expansions, money creation. We often get questions about non-sovereign currencies, cryptocurrencies. Until someone can convince us that Bitcoin's not a Ponzi scheme, we won't waste brain cells considering this type of currency and investment. In this article, we look at the most popular alternatives to holding the US dollar, euros, or pound sterling. How should investors expect to react tomorrow? The basic assumption that investors make the odds of gold rising tomorrow includes: is inflation expected to rise? Gold should appreciate in price. Are risk assets or equities expected to fall? Gold should appreciate in price. Is the economy in the recession? Gold should appreciate in price. Is the US dollar expected to depreciate? Gold should appreciate in price. Are treasuries expected to rise? Gold should appreciate in price. We'll leave the first question for now. Inflation may be coming given the money creation in the world, but as long as aggregate demand remains suppressed, we won't see inflation right away. But we believe that once inflation does hit, gold will almost certainly be the asset of choice. Moving on to the next assertion, Should an investor be predicting the near-term future for prices of gold based on trends in the stocks, the S&P 500, U.S. Treasuries, or the U.S. dollar during recessionary or bear market periods? The answer to this question is difficult to answer based on historical price behavior, since recent recessionary periods have been punctuated by central bank quantitative easing, QE, which potentially distorts historical relationships. We only look back to the prior two recessionary periods, 2000, 2003, and 2007 to 2009, a glean response to this question. So now let's get into it. Gold in the 2000 to 2003 recession. The 2002-2003 recession officially began in March 2001 and ended in November 2001. But don't tell these dates to equity investors. For our examination of the gold price, we'll extend the dates to February 2000, just before the top in the NASDAQ, to January 2003, a few months after equities bottomed. During the 2000 and 2003 period, gold appreciated by 18%, although this period included a negative 12% drawdown in the yellow metals price. Let's first look at how gold performed versus stocks back in 2000-2003. Remember that this recessionary period did not see massive Fed quantitative easing as it did in 2007-2009 period. Clearly, the 2000 and 2003 period was a two-tailed story for gold. In the first 9 months, the equity bear, gold fell with stocks. Then, in the remainder of the equity bear, gold decorrelated and rose into the end of the bear market. Over the 2000 and 2003 period, the daily correlation coefficient between gold and stocks was negative 0.17%. In other words, betting on a near-term rise in gold prices based on falling equity prices proved to be the right trade. Now let's look at how successful timing in the gold trade based on trend bonds was in the 2003 recessionary period. Over the 2000 to 2003 period, the daily correlation coefficient between gold and treasury yields was negative 0.58%, meaning that gold tended to trade in the same direction as treasury bond prices. The arrows in our chart above show that in the first part of the recession. Yields fell with price depreciating. Then from early 2001, gold rallied even as rates were range bound between 4.5% and 5.5%. Finally, we look at the success of trading gold off trend in the U.S. dollar index past recessions. Over the 2000 to 2003 recession period, the daily correlation coefficient between gold and treasury yields was negative 0.56%, meaning that gold tended to trade inversely to the dollar, which is generally what investors expect. And that's true. When the dollar index is high, gold and silver is low. When the dollar index is low, gold and silver is high. Looking at the chart above, we see the overall tendency for gold to rise when the dollar falls, but the relation, and you can see that right here. But the relation also broke down frequently if you're hoping to day trade gold based on gold trends in the greenback. And you can see that when the dollar is high, gold and silver is low. When the dollar is low, gold and silver is high. So, this article explains a lot, but let's go over the conclusion. So gold may make sense in a balanced portfolio for its relative decorrelation to other asset classes and lower volatility. However, betting specifically on gold in anticipation of a crash in equities, a weakening dollar, or rising yield has a spotty track record in prior two recessions. We don't like holding non-yielding assets such as gold for an extended period of time, but trading trends in gold can provide portfolio outperformance when other asset classes are in downtrends, and this provides the investor as a disciplined approach to his or her gold trading, and especially not trying to predict the future gold price movements based on recent trend stocks use the dollar. And that's true because you can't let's enlarge this. You can't provide an accurate silver forecast or silver prediction, a price prediction, especially because the unknown factors. The markets act differently during certain times. Like back, all the silver price forecasts from last year are extremely out of whack because nobody knew that this pandemic was going to take over as it did. So in the coming months, in the coming years, we can't accurately see where silver and gold are headed because the unknown variables, the unknown factors. What I do know is that the lower the economy gets, the worse the economy gets, the higher potential gold and silver prices have. And that is showing that gold and silver are have a high potential, especially looking at its uses in the everyday world. So it's looking very bullish for gold and silver, and more specifically silver, as silver is used in so many things, and we find new discoveries for silver as it can purify water, as it's used in so many different things in technology, especially as we advance in a new technological era. So anyways, I'm going to wrap this video up here. What do you think about $85 silver, 556% increase? The gold to silver ratio should be around, 20 to 1, 30 to 1, it may be as high as 75 to 1 if I want to be realistic, but 115 to 1 is just extraordinary. It hasn't happened in 6,000 years since the beginning of man. It's definitely not something that needs to be there. It has to correct back down. I am curious where you think the ratio should be, the average should be. Because I would love to hear your insight, your knowledge, So anyways, if you did enjoy this video, if you thought it was educational, informational, or just entertaining, make sure to smash the like button. Make sure you subscribe. I'm posting daily videos. Go check out the other videos I posted today. Some very, very, very good stuff. I definitely don't think you want to miss that. So anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.